Well, hello everybody, and a very happy Memorial Day weekend. If you are a service member out there and you have been protecting our country and providing all the liberties that we enjoy here within the country, I really salute you. Thank you very much for everything that you do for us, and yeah, you're definitely well thought of. And again, thank you very much. And I just want to send out a video on a couple stocks right now that I'm in, KPTI and VIVE. I think these are going to be some pretty decent movers here coming up in the near future. I want to start off with KPTI and dealing with exactly where I think this is going as it runs up to its PDUFA date. That's going to be July 3rd, if I'm not mistaken. Possibly an early approval with them, which would be great. But just providing some technical analysis and building a case as to why I think it's going to move to certain areas. I can tell just by looking at it right now that this move right here, this big bomb right here, I believe that was when news was released that their PDUFA was going to be delayed. I haven't looked it up, but I think that that's when it was. And I can tell just by looking at it right now, as a minimum, running up to its PDUFA date, I really sincerely believe running up to these lows right in here, oops, right into here. I don't know why it's doing it, but every time I move on a special indicator right here, Trading View, which is the platform that I'm using right now, has been real funky this weekend. So anyway, sorry if this thing is jittery. That's not me. It's not like I have a medical condition. It's actually the program right here. But anyways, so this line right here at about 8.19, I think that $8 range is going to be right as a minimum where we're looking for this thing to run. So what I like to do, I'm going to give you an idea as to why I believe that. As I'm looking at this thing right here, I'm looking at it just as an overall view on my daily chart, and that's just it provides just a basic overview as to what I'm looking at right now. That's provided on the daily. As I move down some time frames, I like using the daily as a broad overview. I like using my 4-hour and my 1-hour as my trading time frames. Okay. So as I drop down to a 4-hour right here, it starts to tell me a little bit of a different story. And I can see this big drop right here, puts in a base, tries to recover. Some might refer to that as a dead cat bounce. And then it starts heading back down south before it starts reversing right here. Okay. Now, what it's doing right there is it put in a higher low. Why is that a higher low? Because if I draw on my first low right here, this low right here is lower than this low. Conversely, this low right here is higher than this low. Okay, so it puts in a higher low. That tells me, indicator number one, that the bottom is definitely in on this after what you could debate to be a double bottom right here, but not quite. The second thing that I'm looking at is this reversal right here that's taking place, that's happening on volume. Okay, the volume has been increased right here, as we can see down at the bottom, right down here on the bottom of my charts right here. So volume is definitely increased compared to previously. So that tells me that the turnaround right here is just happening. So as I'm looking at it further, one area of resistance, which is now going to become support, we're going to talk about that in a second, is going to be this previous high close right here. If I draw that in, adjust it a little bit, that seems to trick the system if I do it that way, now that I know. Right there. So I put up a post the other day. If we can get a break above, close above, I think I put 589. I'm showing 590 right here. Same difference virtually. If we can get a break above, close above on the 4-hour, higher time frame, I think that we're looking at a really nice run. Again, at least to that 820 mark right there, which we did. We got on the 4-hour, we got a close right here, then it dropped back a little bit. Now we're continuing upward. So first thing that I'm looking at is a break above, close above. This most recent high right here, I think is a great indicator that this thing definitely wants higher. Now, something that's interesting right here, this is on the top 4-hour time frame. As I move it to a 1-hour time frame, I can start to see this thing tell a completely different story in more detail. Actually, same story, but just in more detail. We can start to see that I put in a low right here. I'm going to adjust these here in a second. Again, the trading view is just messing with me. Man. Jeez. Anyways, I've got a low right here. I've got a low right here. I've got a low right here. And I've got a low right here. So I have an initial structure low right here. I have a higher low right here. I have a higher low right here. And I have a higher low right here. Okay. So that doesn't show me that on the 4 hour. Can you go back to the 4 hour? You can see it doesn't really show you that. So that's one benefit, huge benefit of dropping down a time frame. That 1 hour time frame really can tell a real nice story. Now what I'm looking at right here, I'm looking at this first move, break above, close above. We break above these most recent highs that were being put in right here, and one that's going to be put in right here, and right here, okay? This move right here violates both of those, and then it starts to pull back. Where does it pull back to ultimately? If I stop right here and I start looking left, if I do that, start looking left that way, you can see where does it pull back to? Right back in the previous structure that I just broke. Okay, that's just how markets move. They break resistance, and that resistance now becomes support as it drops back down before continuing upward. So as I'm looking at all that, that's a very significant move. I got a break above, close above, a pullback back into structure right here, and now we're moving forward. So as I start to look at some Fibonacci retracements, I can start to kind of dissect this move even more. Do Fibonacci right here to there. It is roughly, with TradingView messing with me, looking at a 50% retracement before continuing higher. Same difference right here. Same difference. As I break above that level right here, break above, and now we pull back. Now where do we pull back to? I look left, right back into that previous resistance, now becoming support and continuing higher. So anytime when I'm using trend continuation strategies, I'm looking at this break above, close above, this most recent level right here, okay? Break above, close above, which we get, and I'm looking for the pullback, and then to get involved in that trade, I'm looking for a higher high, higher close candle. So what I did on this trade right here, I didn't get turned on to KPTI until about right in this area right here. This break above, close above, I saw that, looking for the pullback back into structure. We get that. And now, as I make this bigger, to get involved, to get long on a pullback, on a trend continuation trade, I'm looking for what's called a higher high, higher close candle. I think I put up a post right around here. Great move right here on a pullback. I think this is going to be a nice buying opportunity. What I was watching at that moment in time was each hourly candle. I'm looking for what's called a higher high, higher close candle. So this is my lowest close candle. I'm looking for a candle to appear that's going to be higher than the highest high right here. So anyways, my close is going to be at 607 right here. My high is going to be 637. In order for me to get long, I have to have a candle that is going to close higher than 637. Follow me? So as I move forward, that candle didn't do it. This candle right here is now my lowest close. I didn't get a higher high, higher close candle. This candle right here was a lower close compared to this candle. That is now my lowest close candle. Okay. Now I'm looking for a candle. This is my lowest close at 580. My high here is 595. I need a candle to come along higher than 595 in order for me to get long. This candle didn't do it. This candle didn't do it right here. This candle did it. This is where I got involved. Right before it closed, I got involved at about $6 a share. I saw it was going to close above that 595 mark. I purchased here. It closed, it came back the next day, dipped back down into structure. Anecdotally, I don't have data on this, I haven't back tested this, but I would say anecdotally, once you get this higher high, higher close candle here, this drop back down somewhere into that structure happens probably about 90% of the time. So if you miss that higher high, higher close candle, look for that dip right back down into here to get long. That seems to be a really nice trick that works nicely. So I got involved there, and now it looks like we're continually trending higher. The nice thing about this is once you put in that higher high, higher close candle, I can now put a stop loss just below my my recent low right there. So a stop loss could go about right there at about, say 563 or so. Okay. So that's a great method, using the higher high, higher close method to get long on this trade, which I really like. The other thing that I forgot to mention over here is the market likes to move and make these measured moves, harmonic moves. Okay, what I mean by that is if I measure this entire move right here from my lowest low right here to my highest high right here, and I clone this move and I copy and paste it basically to now put it on my lowest low, which is going to be right here, okay? Right there. Look how that move terminated, an equally measured move right here. right on the money right here before it bounced up a little bit higher. People got excited with it, but it closed. It's all about the close. Closed right at 630, which is my line right there. My measure moves at 631. So a very nice measured move right here. That's called an AB equals CD pattern. Okay. Then we get the pullback happening right here. And if we can get a break above, close above this 642 mark right here, I think we're looking at a next level up right here. And I think we're going to get that eventually. I think that's what's going to happen. The other thing is I could draw a Fibonacci extension right here. Here, swing low to swing high, back on in, and came up just shy. I didn't really draw it very accurately because of this issue that I'm having with TradingView, but about right there. Oh, it did actually. Look at that. Look at that candle right there. The high candle at 642 was this 1618 extension, and that high of the candle was 643. Touched the 618. Okay, my main Fibonacci extension number 1618. The other main one being 127 extension. Hit my 1618 extension and then promptly pulled back. And we're probably showing at that point in time oversold on the RSI, which we were right there. Okay, so great indicator right there as I'm looking. I'm oversold on the RSI. I'm hitting the 1618 extension. I'm at the end of an AB equals CD measured move right there. Great point in time to pull back on some profits right there and wait for the pullback, which is what happened right here. Rebuy and get ready for the next leg up. I think what's going to happen here, just based on how we're moving right here and based on our catalyst that's coming up right now, we might be looking at what's called a 3 drives move. And 3 drives is basically the same thing. If I go ahead and I measure this last move right here with the Fibonacci retracement, which is going to be roughly about right here to right there, that first measured move back here, or the first retracement right here, was a 50% retracement. This second move right here that I just drew in right here retraced 50% as well. So the market is moving very much in step. And this is a great argument as to against how things are just always so manipulated. And if the markets are manipulated, then somebody out there is doing it with absolutely mathematical precision. I've just showed you AB equals CD pattern, how it terminated beautifully right there. I just showed you with the 1618 extension, how it terminated there. Oversold condition up there on the RSI. Now we're in pullback mode. So these things have a rhythm, and the market definitely does have a language. Now, perhaps people are buying and selling a lot of shares that is driving a certain price, but the psychology behind it is what's being represented here. People are making decisions based on psychology, based off of fear and greed. That's what they're doing, and that's why they're making these same decisions at these same points in time, because human psychology does not change. People have a mental map of how they like to do things, whether they're programming a machine to do it or whether they're doing it themselves out of their mom's basement. It's all acting the same. And hopefully these measured moves and everything else that I'm showing you right here, that's how it is. So I get 50% retracement right here. I got another 50% retracement right here. I think what could possibly happen if I measure out this move right here, and then I copy and paste this, or clone it rather, and go to our, let's assume that this is going to be the lowest low right here at the bottom of that move, right? Right up here, I think is where we're going to look to terminate, which is going to be right at about that $7 mark, say about 714 or so. If I draw a Fibonacci extension right here to there and then back on in, what do we get? Ah, geez. There we go. Comes in right around that $7 mark as well. That 1414, secondary Fibonacci number, right about that 7. So figure 7, 750. I think this is the range we're looking at for the last part of that move to terminate. Somewhere right around there. In fact, if things get really nutty, maybe go up to that 1618 extension as well. I think that that's going to be a turnaround zone or a kill zone happening right around there if we can break above that 643 mark right here, the previous high right here. I think that that's what's going to happen. So that's going to be where I'm going to look to peel off some profits right there and look for a pullback, look to see, make the market show us what it's going to do. So for the immediate future, I think that that's what we're looking at. Anything beyond that, nobody knows. Notice I'm doing this from a technical analysis standpoint. From a fundamental standpoint, you may be able to make a different argument with that. But from a TA standpoint, there is nothing that supports really anything differently right now. Although that terminates at around 715 mark, somewhere around there. Again, that $8 mark, I think what we're going to look at is maybe a pullback right there before another run up towards that mark right there. Beyond that, even more accurately, I should say, even beyond that, to say that things are going to go higher than, in fact, I'll draw it in this way, than this region right here, say about right there. I mean, I think that's the ultimate kill zone right there for PDUFA. I think we're going to run up to 715, pull back, maybe get another run back up into this area right here. But anything above and beyond that, you really don't know. There's just nothing that says it's going to do that. If you get a close above maybe about the 930 mark, somewhere above there, maybe 950, then that would tell a different story. But until then, this is the best that we know right now. That's KPTI. That was a longer one than I anticipated, but I think it's a lot of good info. You can see by using a lower time frame how that just tells a totally different story within this area as compared to the daily right here. Ultimately, buying and holding this one up to around that $8 mark, I think is going to be really nice. If you want to trade swings, you can do that. There are definitely ways I've shown that you can go ahead and take profits. But I would say, at least to that 715 mark, we're looking good. Okay, quickly, VIVE. I have a real heavy position in this. The thing that I'm looking at with this on the 1 hour chart is a bull flag pattern. It had a run up here on volume. Now we're trading sideways. In fact, I put up the other day, the thing that I drew the other day on the bull flag pattern was a little bit off. I'm going to draw it in more accurately right here. That's kind of what we're looking at right here. This got me excited right here. I thought we were going to be breaking out of it, which it is, a false breakout to the upside, and now we're pulling back within the flag as well. Typically, bull flag patterns, this is your preceding move right here. Typically, once it consolidates right here, this is a trend continuation pattern. Once it runs right here, then it consolidates right here for the time being before continuing in the same direction as the preceding move. So I think we're looking at something like that. That's going to be happening. Now, if I draw this in a little bit more accurately using an AB equals CD pattern, I think we're going to break to the upside here. It does have catalyst coming up in the next couple months. It's going to be catalyst driven, so I think we're looking good with that. If I go ahead and I clone this right here and move it up to there, that's my lowest low, up to my highest high, which is going to be about right there, I think is what we're looking at. Actually, wait a minute. God, this thing's messing with me. There. Okay. Let's do this accurately here. Now, I got to clone that one. Move that one on over. There we go. That's what I'm looking at right there. Okay. So let's measure this retracement right here. And you're going to see, once I measure this out, that I get a 382 retracement right down here. 382 retracement tends to indicate trend continuation, the most ideal setup for an AB equals CD pattern. So if we can break above and close above that 65 mark right there, I think we're looking really good. And I think that we're looking at coming up on about that 77-cent mark right there. If I draw an extension right here, it is going to hopefully, geez. Well, I don't think that's very accurate, but I think that 1618 is going to be a little bit lower. I think it's going to come in right around that 77.43 mark right there, if I could get this thing to comply. So I think that that's what we're looking at. But when I look at this, I'm going to go to a 4 hour right now. When I look at this from a different perspective, I have what's called here a bearish bat pattern. Without going over all the rules with it, what I'm looking at right here, this is my top leg of my move right here. This whole move right here, that's called an impulse leg right here. What I'm doing is I'm taking that move right there, I'm measuring from there, from here all the way down to my lowest low. And I can see right here, I get a 50% retracement of this first move right here. Okay, that's condition number 1. Actually, I'm going to go through all the rules right here. Condition number 2, I get at least a 382 retracement right here. Okay, I actually go all the way down about an 886. So as long as I get a 382 retracement for my bat pattern, then I'm looking good. and then continuation and completion of the bat pattern is actually at the 886. So when I draw all this in, I know didn't want this to be a advanced pattern class, but it's kind of turning into that. So I'm just going to go over it quickly. This is what that pattern is going to look like right here. That's called a bearish bat pattern, and about a 65% probability or so that once it hits point D right here at pattern completion, 72-cent mark or so, then we're going to sell off right here. And it's just going to be a pullback. Might not be a huge sell-off, but it's going to be a place to look to take some profits. Now, I'm going to believe that this measured move right here is going to supersede that 886, and it's going to, I think, terminate right around X mark right there, which is going to be about 76, 77 cents a share before getting into overbought conditions and then look for a pullback. So for that reason alone, once this pattern completes, I'm going to look to take profits, wait for that pullback, and look to jump on board again when the conditions are right. But that's my trade plan for that one right now. You got an AB equals CD pattern. Once that D point on that pattern completes, the AB equals CD pattern completes right there, we've actually completed a bearish bat pattern as well, looking for that to drop off and rebuy at a lower price. So that's what we're looking at with there. I'll do a video that's more in depth and a little bit of an easier explanation. I'm already at 21 minutes on this video. It's not what I wanted, but anyways, I just want to throw in that advanced pattern there as to reason why I'm looking to sell right there. As we get further along with this pattern too, I'll go ahead and revisit this as well, just to review exactly the bat pattern and why it's working the way it's working. Anyway, sorry for being on hiatus for a little bit. Had a newborn at home as well, and that has taken up my time for the past month. So now that I'm back at work, now I have some spare time. Funny how that works. Anyways, best of luck out there. Happy trading. Great Memorial Day weekend. I'll talk to you soon.